Eric Muathe at muathe.com with US market analysis for the weekend of May 21st and May 22nd, 2016. Let's take a look at markets here with about 1 hour to go. Markets are pretty much called to the upside, the biggest mover being the NASDAQ, which is up right now about 1.2 with an hour to go before the close. So let's take a look at the charts. But before we do, just a quick reminder here, as of this coming weekend, or the weekend of the last weekend of May, I think I'll not have a video just because I'm going to be traveling. So just keep in mind, if you don't see a video from me in the coming week or in the week to come, it is because I'm going to be traveling as of end of May. So anyway, take a look at the markets here. We begin with the NASDAQ. Now, the one theme we're going to see in many charts here, pretty much also across the globe, is we seem to be stuck in a range. And I'll show you a simple way looking at this. Take a look at this NASDAQ support line that we've been watching. And also take a look at the top side. So the RSI is showing that the market is pretty much stuck in this range. At some point, we are either going to resolve by moving higher, by breaking out above that range to begin a nice move higher, or maybe eventually what happens is that the market ends up breaking below the wedge and we see a big drop. So right now we are stuck in a wedge. That's why markets are pretty much over the last couple of weeks or so being a little bit on the confusing side to the sideways action. Every time we move lower, the market finds immediate support. Every time we try and move higher, the market is pushed back lower. Here on the NASDAQ, again, we've been watching this simple daily RSI line that the market has been responding to, and we've come here in the month of May on multiple occasions. We seem to be finding some nice support there. If you take a look at the hourly chart for the NASDAQ, you'll see here that simple line here connecting RSI highs is coming into play. Right now we've been smacked back below this line as the market was moving at the highs of the day on Friday. That was a resistance. That's why the market is slightly off the highs. So we can see here there's resistance on the top side on the hourly, and on the bottom side you can see that there is support during the lows of the week. So until we can resolve either above that wedge or below that wedge, I think right now we seem like we are stuck in a sideways market. Take a look at the Dow daily, and the two lines we've been watching. Line number one is the line connecting the daily chart for the Dow, and you can see at the lows over the last 2 days or so the market hit that line and we seem to be holding and moving higher. That's exactly what the bulls wanted to see. Take a look at also the other line we've been watching for potential support. It's the line off the lows here. This movement in the RSI brought the market off the lows and successfully has moved the market higher. So we can see that that has been a nice low here. We draw a line from this entry point, and this is a perfect support right now. The market has touched that line and we are bouncing with uniform activity. So to put it another way, as long as the market is holding above the green line and the blue line, then we have to assume that the market is sideways to higher. So as long as those two lines are holding, the market continues to be constructive. If you take a look at the Dow hourly, and here on my hourly charts I'm using RSI setting of 26. So on the hourly charts and the 30-minute charts in this video, RSI setting is 26. What you see here is that the two lines that we've been watching for support on the Dow, a simple line connecting the lows here, has come into play this week as the market touched that line and found support. Also, coming off the lows of February, we can go back and check what the RSI did, and there was a movement here in the RSI. So that slight breakout right there brought the market off the lows of actually January for the Dow here intraday. So draw a line from there, and this line has been support ever since. You can see here support on the line for the lows right there. Lows of February, we came close to the line there for the lows there, and we held here for these lows, and now we are coming back and we are holding that line. So here we are seeing that the market is using the RSI to bounce, and there we see support. Also, there's another way of looking at this, which is a short-term improvement on the RSI here. while prices were making lower lows. So that negative divergence or positive divergence, that positive divergence is the reason why we are seeing the market not really dropping beyond the lows of this week. So we can say that clearly there is a line here of support on the hourly for the Dow, and yet there appears to be a line of resistance on the hourly, if you draw it like that. So again, we are stuck in a range, even on this chart, which is the Dow hourly chart. Take a look at the chart for the S&P 500 on the daily. And again, here we see the lines we've been watching for support have come into play. Simple line connecting RSI lows here held the market together over the last 2 days. Good support. And also we see that here, this movement here in the RSI, this breakout brought the market off the lows of February. So we draw a line from here, and you can see as of right now, this again has come and is support in the current right here. So the daily chart, as long as it is holding on those two lines, the RSI suggesting that net the market should be okay, stable, maybe even move higher. So those two lines are holding the market. Right now, if you're looking for a reason for the market to go lower, you'd have to wait until it breaks below those two lines. If we take a look at the VIX daily, we can see that the VIX is coming back to a trouble spot for the VIX. A simple line here. In fact, if we draw that line, let's just draw it off the break of these highs here. So there was a break off the highs there for the VIX on the 1 year daily. So we can see that this break took place with the RSI breaking down somewhere there. We draw a line right there, and this gives you a lot of information. It gives you all the points where the VIX has been stalling over the last year or so. All these are uniform activity rejection, and the VIX tends to form a short-term low or short-term high. Here we broke through it again for the highs there, resistance here for those highs. We came close here for the highs there, and now we've hit that line and we are seeing resistance. So the VIX, until the VIX can clear that line of resistance on the daily, we see that the VIX here is not giving pressure to the market on the downside. So a breakout above that line is when we are going to know that the market is due for a major pullback. For now, the market is rejecting the VIX as the VIX tries to move higher. In other words, until the market can move the VIX above this line, the market should be stable. Maybe the market should also be acting well and moving higher. You can take a look at the hourly for the VIX, and we had watched this during the week when the market was trying to go lower. On the VIX hourly, I'll show you where it's been showing resistance, and it's a simple line here, somewhere around there. This line on the VIX so happens to be at about 61.8 on its hourly chart. So at about 61.8 on the VIX hourly, you'll see that it's been struggling to hold above this level. The break here, pull back, even here you can see resistance throughout these highs. Resistance here on the line for the highs there, resistance here for that high, resistance here for this high, and now we see resistance here. So generally speaking, what I'm saying here is that the VIX is not giving us any type of a buy signal, so the market is not necessarily broken. It would need for the VIX to eventually move above that line of resistance if the general market was to see a big drop. So we'd have to wait for a breakout in the VIX if the market was to move lower. Right now the VIX is suggesting the market is okay. Let's conclude here by taking a look at the S&P 500. And just like we did over the last weekend's market analysis, if you take the monthly closing highs, you form a trend line. As far as the S&P 500 is concerned, it should be something like that. And here we can conclude very simply that as long as the S&P 500 is below this trend line and without a breakout, we have to conclude that as long as this is the case, where we are seeing resistance on that trend line connecting the monthly closing highs, then we have to assume that month to month we are still looking at a market that could see lower prices. What the bulls want to see here is that eventually the S&P 500 manages to move above that trend line. So for now, since we are below, we have to conclude that net the likelihood of markets going lower month to month is still there until we can see a breakout above that trend. Generally speaking, remember, we are stuck in a range. We shall see how things go.
Eric Muaded, muaded.com. Keep in mind, might not have a video until 2 weeks from now. Eric Muaded, muaded.com. Good luck, peace, and blessings. EACS.